Good morning. This is the pre-market report for Wednesday, 23rd March 2022. Now, coming to yesterday, the index performed exactly as we had anticipated in the video, a dip and a sharp rise. So I hope everyone made money using the levels and just the logic. So today now, there's not much on the international news front apart from basically Western countries saying they're going to review their policy on nuclear weapons. So apart from that, there's not much news. So let's delve right into the charts. Now when we come to where the SGX Nifty is trading at 17,438 versus the close of 17,362, that everyone yesterday expected a gap up today, and even I'm only carrying a bullish position via the option sells, which are for technically expiry, or basically Now when you come to the Nifty position, the Nifty has formed a good candle pattern on the daily chart. It is basically come to a breakout resistance level, and it has basically been stopped by the 200-day moving average on the 4-hour chart. Now the 20-day moving average is coming sharply up. Once this crosses the 50-day moving average, we can have a continuation of the rise. And even if you see the 20-day moving average is again being the resistance on the weekly chart. So a break of that will let the rise continue. Now when we come to Bank Nifty, the situation is similar, only it's in the 3-hour chart, and Bank Nifty has a lot more resistance on the daily chart to deal with, as it's got the 200-day moving average and the 20-day and the 50-day moving average. The 20-day moving average is support as of now, and in the 3-hour chart the 200-day moving average, and 4-hour chart the 200-day moving average. Now Bank Nifty's chart is actually very similar to global charts, I would say, because if you look at Nasdaq, US 500, Dow Jones, and even if you look at FTSE, everything what I saw in the morning, that a lot of them are coming into quite stiff resistance now. So if they manage to crack that, it will be a further up move. But now let's look at intraday, as that's what we're trading with. Now when we look at the market on the intraday time frame, as usual I've loaded the 30-minute chart. Now on the 30-minute chart, we can see we have come back to, we've come back to the change of polarity resistance which I highlighted in the first video, and we are again going to test it if we can break out from it. However, the breakout looks more sustainable today, but while we're getting out of this zone, we might get a bit of intraday bumpiness, a bit of whipsawing, because we're going to be breaking above a major resistance zone that has been resistance since basically 23rd February for us. So today is 23rd March, exactly 1 month. This one line which we had highlighted has played a very vital game, and so naturally a break above it will cause some turbulence, you can say. Now when we look at the levels for trading, now the first resistance level I've highlighted for the Nifty is 17,380, then 17,449 to 475. Now this is a very important resistance zone for the Nifty. This one, yes, will be a hurdle, but it's basically a current hurdle for the Nifty. This one is going to be a very important target you can take for the Nifty, and this one. These two are going to be very important targets for the Nifty as of now. Then for Bank Nifty, this is going to be basically 690. Yes, this is going to be an important target for the index. If it clears this, then I believe these two, 36,995, this one might provide some resistance, but I believe it will be quite easy to crack, and then this one and this one will be the more important targets on the upside. This one will provide resistance, but I don't expect it to be resistance that holds it down for very long. If it cracks this one will crack pretty soon and will be here. On the support front, 17,265, 17,190, 17,132 and 17,008 to 060. Now when we look for the support, basically we can say these two are very important support zones as of now, and this one naturally we have seen in the past is very important, but for today I believe these two are very important supports. This is basically for now. If you look on a bit of a positional basis, an important support. And 36,150, 35,880, 35,715 and 34,710. So you can take these two zones as being a rather important resistance, support zone, which was former resistance. So basically, overall, like the markets are looking bullish, and a break of this might cause a bit of a whipsaw movement as we go up. However, we have to also pay attention that a lot of shorts are completely trapped. Now, yesterday's up move, most of the market players did not expect it. Like what I had said in the morning, pull back and rise, most were just expecting the drop to continue, or whatever they call themselves, quant or technical or whatever. They did not expect it. So a lot of shorts are trapped now in the system, and if they lead to booking the losses, then we can get very strong short coverage. That is why I have given something like a target like 38,027, which is way above. But if we get very bad short covering, yes, we can reach even such a target today. But now it all depends on how much pressure they can withstand, because tomorrow is expiring.
It's 7:30.
Anyways, so thank you for watching, and do like and subscribe to the video. I will be also making a video on a stock today evening, so do watch out for that. Thank you.